All right, let's bring in StoneX, their chief market strategist, Kathryn Rooney Vera. KRV, I miss you. Listen, you have clients all around the world, and that's why I thought you'd be perfect for this segment. I did see you also recently posted the StoneX Cross-Asset Management Outlook. I just want to kind of begin overall, though, with the U.S. markets. Are you bailing? Are you looking for opportunities?
Yeah, I think we are starting to look for opportunities, but that doesn't mean that more pain is not in the offing. President Trump has been clear about this, and his administration as well. The strategy seems to be, Charles, short-term pain for long-term gain, and that's something that I've discussed with a current congressman as well. You know, short-term pain means basically removing the role of the government or making it smaller. B of A had a piece saying 1 year ago, 85% of U.S. job growth was from government and government sectors dependent on government spending like health and education. You know, in 2024, 1/3 of GDP came from government spending. So those are big numbers. And actually, that latter one is a record high outside of wartime or crisis. These are all this is a Bank of America piece. I admired it. I thought it was very good. And that was financed by 6 to 7% of budget deficit. So American exceptionalism is still there. And I would add to your point, Charles, which is that our growth still exceeds the peers, Europe, UK, or Japan. But I think we could be in for short-term pain, but it would be long-term pain getting these deficits under control.
So to that point, we've seen massive hedge funds shorting, record puts in the market. Now, normally these are sort of contrarian buy signals, but to your point, maybe it also points to near-term rockiness. How does folks watching the show, should they be more focused in past this short-term period?
Yeah, look, you can also look at the record of volumes in the purchase of put options. So our protective put recommendation has played out really well. You know, we're seeing record put volumes right now as investors basically scramble to hedge, but now it's expensive to hedge. So I think you probably want to be looking for opportunities at this point. But as I say, going forward, there will be additional ones. So don't put all your eggs in one basket, and timing the markets is impossible for anyone. Healthcare is our top pick for this year. It's the best performing sector year to date. And as you mentioned, European equities have really done very well, outperforming the U.S.
So in your themes, you talked about takeaways, expansion of elevated risk, inflation holds the Fed's feet to the fire, fiscal debates in the spotlight, stronger dollar driving market uncertainty. The Federal Reserve, I want to ask you about the Federal Reserve because I don't know if I've seen a time where there's been this many individual, disparity, right, in terms of will they cut? Won't they cut? Will it be 2 times? Will it be 3 times? There's still folks out there who don't think they'll cut at all. What are you anticipating from the Fed? Because they've got a lot to deal with, particularly with this soft data.
Yeah, they absolutely are. And they're dealing with the biggest threat, which is stagflation, which is above trend inflation with slowing growth, which may be potentially what we have. So it's very difficult for a monetary authority to cut rates aggressively or dramatically in an environment where inflation is still above target and potentially moving a little bit higher. So, the Fed this week, I think they're going to talk about policy-driven uncertainty, weighing on growth. I don't think there's a recession right now or in the offing, but I do believe, and you can see it in the data, Charles, businesses and consumers and the regional Federal Reserve banks have also indicated that corporations and consumers are pausing spending. So it's an uncertainty shock. It's not yet quite a recession. I
got less than a minute to go. You cover all the assets, equities, U.S. and non-U.S., bonds, commodities, FX, digital assets. Is there any particular area folks should be considering to be overweight?
Yeah, I think you can still be overweight equities and probably should be, but you want to be diversifying into the more defensive sectors like healthcare and staples. I think they're going to do well. Healthcare got savagely beaten up last year. So even if we resume upside in the S&P, which I think we do by year end, healthcare is the one that most stands to benefit as the all boats rise phenomenon occurs. And then on the flip side, if we have a correction or additional correction, then this is a nice defensive. So you're well positioned on either front. This was like all from utilities last year, which did very well.
Great stuff. KRV, you're the best. Thanks for taking the time.